move on now. RPG Life Sciences reported what was a strong set of Q2 FY24 numbers. The company has reported a 14% revenue growth on a year-on-year basis, and margins have expanded, aided by cost efficiencies and sales hygiene undertaken by the company. Do note that the company remains debt-free and the stock has surged more than 67% this year so far. To discuss the Q2 numbers, we have Yugal Sikri, who's the MD of RPG Life Sciences, joining in. Mr. Sikri, thank you very much for taking the time out. So this 14% revenue growth, could you start by giving us a separation or a sales growth in three of your key divisions, domestic, international, as well as API? How did you perform in all three of the divisions?
Okay. Thanks, Ekta, for getting me on the show first. And all the three businesses segments which we have performed well. As you all know that 2/3 continues to be contributed by the main division or the domestic formulation business, and that has grown at 16%. What's heartening to note that our growth continues to be double the market growth. For the H1, the market has grown at 8% and we have grown at 16%. Similarly, there's a strong growth coming from the international formulation business, which contribute close to about 19% to our sales and has grown at 15%. The third one, the smaller one, which is API, has also grown at single double digits, around 7 to 8%. And so all the three put together have contributed to the growth.
Right, 7 to 8% for API, 16% for the domestic business, 15% for the international business. Mr. Sikri, your margins are a story for the ages, because I remember just a couple of years ago, FY19, your margins were around 10%, and from there now, they not only crossed the 20% mark, but the halfway mark, they're 24% in the second quarter. The question is there more room for margin expansion? At what level do you anticipate that the margins will stabilize?
I think that's a question which is normally asked, and my answer to this question is that our margin improvement is a very structural and sustainable story. If I look at the 15% improvement in the margin from 9% or 10% to current 24.5% or so, 10% has come because the OPEX reduction and 5% has come from COGS. So both front end and back end has contributed. What has contributed is likely to continue, and what has contributed, the factors are org structure optimization, which is likely to continue. We have stopped the P&L leakages. Our sales hygiene is at the industry benchmark standard. That is likely to continue. The measures which you have taken in the yield improvement is likely to continue. The focus on sustainable, profitable product mix is likely to continue. The measures we have taken, formulation re-engineering, they're likely to continue. So therefore, that gives me confidence to share with you that these are sustainable margins where we have achieved. Going forward, you asked me whether there's a room for margin improvement. I think the exercise of efficiencies will continue. And second is the scale will also add to the profit margin. So therefore, it may not be at the same trajectory what we have seen so far, but these measures will help us to have some creeping increases in the margins.
Roughly 100 to 200 basis points.
Yeah,
so
please,
roughly
please
100 to 200 basis points on an annual basis is what the analyst can factor in, right?
Yeah, you are asking me to give a number to you, which I will find difficult to give it to you. But it all depends upon the scale which we are able to reach, which will add to the profit margin. That's what I can tell you. And that's what sustainably you have seen over the years and over the quarters.
Okay, all right. That point is taken. Well, we could see maybe structural margin improvement continue for the company going forward. I wanted to narrow down on a couple of brands that you have, and particularly Naproxen, which is your pain relief brand. It crossed over 50 crores in terms of sales in the previous quarter. You have indicated that it could be a 100 crore brand for you. When are you probably going to hit that target of 100 crores when it comes to this particular brand, and any other brands which are probably showing that trajectory that you have in your domestic portfolio?
Yeah, we continue to stay put with our ambition to reach 100 crore. It should reach 100 crore in a couple of years' time. That's what I mentioned last time, and that's what I'm retaining this time as well. And the confidence which I get is from all the measures which we are taking. I mentioned that we have around 11 line extensions identified for the brand. We have just launched 4. The remaining are under development, so they will get launched and they will contribute. We have just launched first ever preparation of topical gel of Neprosil brand. And we have done a 10,000 doctors trial, and basis that trial, on the strength of the trial, we have just launched that product in the market. That would also add to the top line of Neprosil. So also the other new line extension which are under development, they will contribute. So that gives us the confidence of the Neprosil reaching 100 crore brand. And as I mentioned last time, our ambition is not to stay put only in 100 crore, because this being a painkiller, it has the potential to be an OTX or OTC product that will also add to the growth of the brand. Second question you had, are there any other products which are in the horizon where we see similar kind of a trajectory? I must point out to there is another. This is not a brand, but this is a category called immunosuppressant category. Doctor picks up either of the 3 or 4 products, and that category also I expect to reach 100 crore in the next couple of years. And we are very strong in one of the brand there, but other 3 brands which are there, we are focusing. There has been almost 100% jump in the sales of those products, basis which I can tell you this category of 100% and is the next one to reach 100 crore mark.
Okay, all right. Immunosuppressants is the other segment that you're quite bullish on. Just before we wrap up this conversation, since we are talking about these 100 crore brands, you remain debt-free. You have indicated that you are quite bullish in terms of M&A opportunities if in case it does come up. The new trend within the pharmaceutical space is to pick up a portfolio of brands or maybe just a segment as opposed to an entire company. Are you looking to probably augment your domestic portfolio via such an acquisition? And secondly, would you probably be interested in selling any of your brands which have such a strong mind space?
Okay. So I think our M&A strategy is very, very clear. We have cash with us now, and we are building cash quarter after quarter, and we like to use that cash to continue with the sustainable, profitable growth. So we have clearly identified categories, we have clearly identified brand, we have clearly identified other criteria like prescriber, patient base, etc. And our search continues there, and we are quite active on that space. Number 1. Number 2, I must also take the opportunity to share with you that we have 3 segments. Domestic formulation, international formulation, API. Domestic formulations has been our growth driver so far. Today, now, we are looking at the international formulations and API also to contribute to our growth story. So the cash which we have in our hand is being utilized for both the plant upgradation, so that we get approval from various regulators. We can increase our exports of international formulation API business. We are also investing in the development of product pipeline, not only in the domestic formulation, but also international formulations and the API. So apart from M&A, we have a strategy of focusing on other 2 segments also, and which will become a growth driver for us going forward. Having reached to a stage that all the 3 segments today are very profitable today, quite profitable, and equally contributing to our profitability story.
Quickly, before we let you go, Mr. Sikri, your Ankleshwar plant, it's been under warning letter for the last 10 years now. Any remediation, any upgradation, anything inside?
Yeah, I think this was the question which was asked earlier, and I responded. I will repeat answer the same question. We have undertaken a plant modernization exercise actively. We have spent close to about 50 crore plus on the plant, and which is what I covered in my earlier when I was talking about the future growth strategy. So by the end of this fiscal, our modernization and capacity expansion of the Ankleshwar plant exercise will be complete, and we are actually first inviting EU to visit our plant and approve our entire plant, and thereafter the US FDA will follow. where after we have got a product pipeline properly developed, which fits the US FDA requirement. So US FDA continues to be my last priority, as I mentioned earlier, but the plant would be ready for a US FDA approvable standard and their visit.
All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. We need to take a short break. Up next, Aditya Agarwal will join in to talk technical. Stay tuned.